Welcome to the next module of the Trading Den. In this module, we will be going over turtle soups, which is order pairing for the smart money. Now, we have went over low resistance liquidity runs and high resistance liquidity runs with external and internal liquidity levels. Now, this right here, this order pairing is going to make all of that make sense for you. This is how smart money will accumulate their positions. A turtle soup will begin every move within the markets. Now, this is where smart money will accumulate their position. Smart money accumulates their position above old highs and below old lows, which is external range liquidity. This right here is what you are missing to thoroughly understand how and why the markets move. This is how the market books price. External range liquidity, turtle soups with order pairing is how the market is booking price. Not trading off a higher time frame PD arrays is walking blindly in the markets. If you are not trading off of higher time frame PD arrays, you have no idea what you are doing in the markets. Now, what I want you to know that is extremely important is retracements on the higher time frames are reversals on the lower time frames. So whenever we are coming down, let's say we are in a bullish market and the bullish market is retracing on the 1 hour chart into a 1 hour fair value gap. What is that setup? It is a reversal trade on the 5-minute time frame to target that 1 hour fair value gap. So reversals on the lower time frame are only retracements on the higher time frame. Now, once again, I want you to remember the time frame alignment. Monthly levels to daily structure, weekly levels to 4-hour structure, daily levels to 1 hour structure, 4-hour levels to 15-minute structure, 1 hour levels to 5-minute structure. And we are going to be going over every single one of these time frames to get the structure and exactly how the turtle soup will begin every move within the markets. Now, to actually understand how a turtle soup begins every move within the markets, how are order blocks formed? How are fair value gaps formed? And how are breaker blocks formed? Now, we are going to be going over all three of these in later modules and how to pick high probability order blocks, fair value gaps, and breaker blocks. But you need a liquidity sweep for an order block to be formed. You need a liquidity sweep that forms a high probability fair value gap, which we will get into. And you need a liquidity sweep that forms a breaker block. None of this can happen without a liquidity sweep. And a liquidity sweep is a turtle soup on the higher time frame or the lower time frame, but a turtle soup is order pairing for smart money to accumulate their position to send us to the external or internal draw on liquidity. Now, let's head into the charts and show some examples. Now, here we are on the monthly chart of NASDAQ. We have went over this example in the other module. Whenever we took this monthly external draw, which is this buy side level right here, and returned back into this equilibrium fair value gap right here. I showed you an example on the daily time frame that would have gotten you stopped out, but I did not mention why that trade was not valid. So, whenever you understand order pairing and turtle soups, you would have avoided that first trade. Let's head into the daily chart to show you exactly what I am talking about. So here are the lines that represent the monthly fair value gap, and here is the daily structure. Now, this trade right here that I showed you guys in one of the other modules would not have been valid because I saved this for this order pairing video. Now, this is exactly how smart money accumulates their position, below old lows and above old highs. Now, since we have just reached that monthly internal draw, we need to wait for daily structure to accumulate their position below old lows. So right here to our left, we have old lows resting right here. So we wait for the daily structure to accumulate their position below these lows right here to then send us higher. So whenever we see this in the market, this sell side liquidity, we know that this is going to be a fake move to engineer liquidity. Because we create a failure swing here, we create a failure swing here. What is that creating on the lower time frame? It's creating a low resistance liquidity run. Notice here, we did not engineer any liquidity, but as soon as we get this move below these sell stops right here, smart money is now accumulating their position beneath these lows right here. So these lows right here is a turtle soup on the daily structure to send us higher. We are now in that monthly PD array, the higher time frame PD array that aligns with the daily structure. Now, this displacement higher and this market structure shift is showing us that smart money has accumulated enough of their position to then send us higher. Now, you want to offload your position above external range liquidity on the daily time frame, which is right here, to take partials, and then you know that the external draw on the monthly time frame is now this old high up here. And what do you notice on the daily time frame? We have engineered all of these failure swings on the daily time frame. So now that we have engineered all of this low resistance liquidity run, it is going to be cutting through this like butter. And then you see this accumulation right here, right below this old high right here. It is very unlikely for price to reverse here. This right here is a retracement into what? Internal range liquidity. We have this daily fair value gap right here. We have just taken external range liquidity. So why would price reverse off of this external range liquidity whenever the monthly draw is the entire way up here? So this retracement right here is a reversal on the 1 hour chart. Let's head down to the 1 hour chart. So right here, this line up here is representing that monthly external range liquidity. This buy side level is representing that daily external range liquidity. What do you notice after we take this external range liquidity on the daily time frame? We get our market structure shift right here. So whenever we close a body below this low right here, we are now reversing on the 1 hour time frame to retrace into that daily internal range liquidity. So we have now formed equal lows. And what does that mean? The market is going to want to take these equal lows for smart money to accumulate their position beneath these two lows right here. And what do you notice right here? This right here is that daily fair value gap beneath an old low on the hourly time frame for smart money to accumulate their position inside of that internal range liquidity. So this right here is smart money accumulating their position beneath old lows inside of an internal range liquidity on the daily time frame. So right here, whenever we get this displacement higher, this is the hourly structure telling us we are ready to go to the daily external draw, which is up here, and then that monthly overall draw on liquidity, which is that external range liquidity. So right here is smart money turtle souping this low to send us to that external range liquidity. This reversal on the hourly time frame right here is just a daily retracement to head into internal range liquidity for us to accumulate positions on the smart money side. And what do you notice on this reversal on the hourly chart? We are actually just creating a low resistance liquidity run to send us straight to that overall draw on liquidity on the daily time frame, which is that external draw, and then the monthly external draw up here. So right here we are on the weekly chart, and we have just taken an external range liquidity level right here at this high, and we have an internal range liquidity lying right here on the weekly time frame. Now this right here is a reversal on the 4 hour chart to send us into a weekly internal draw to then send us back up to the external range liquidity, which lies right here now. So let's head into the 4 hour chart. So this buy side right here is representing that weekly external draw. And what do you notice right here? This is smart money accumulating their position above an old high. Now, whenever we get this turtle soup right here, the market has not done anything within this price action to show us that it is ready to reverse. But whenever smart money has accumulated their position above an old high on the 4 hour chart, notice this displacement lower to then send us to that weekly internal draw on liquidity. Now right here on the 4 hour chart, this is the weekly fair value gap that I was talking about. And what do you notice right here at this old low that we have right here? This low right here is smart money accumulating their position to send us to that weekly draw on liquidity, which is up here at that external level. Now right here, smart money has not given us a market structure shift to show us that it is ready yet. Now we re-sweep these lows for smart money to accumulate more of their position, and then we get our market structure shift with a fair value gap to then send us higher to that weekly draw on liquidity up here. So this 4-hour fair value gap with this displacement higher after hitting that higher time frame PD array and turtle souping this low for order pairing and smart money to accumulate their position, you can now swing a position in this 4-hour fair value gap to send us to that weekly draw on liquidity. Now this turtle soup right here on the 4-hour chart for smart money to accumulate their position is a 15-minute setup to target the 4-hour external draw on liquidity. So let's head down to the 15-minute chart. So right here is this low. This is representing that 4-hour low, that old low that I was just talking about. And right here on the 15-minute chart, you can see the accumulation by smart money and then this displacement higher. Now, we will get into inverse fair value gaps, but this fair value gap was not tapped into. You can see it comes within a couple ticks, but it can be a breakaway gap, which we will also get into in the fair value gap module, because we have a high probability inverse fair value gap right here that you see we come into and continue to hold to then send us to that draw on liquidity, which is that external level on the 4-hour time frame. So right here on the 4-hour chart, you can see this internal range liquidity. So this right here is a turtle soup on the 15-minute chart to send us to the external draw on liquidity, which is this low resistance liquidity run, because we have failure swing, failure swing, failure swing on the 4-hour chart. So this fair value gap right here on the 4-hour is going to give us a setup on the 15-minute chart to send us to that external draw on liquidity. So here we are on the 15-minute chart, and what do you see beneath this low right here? This low right here is we are not displacing through these lows. So this is smart money accumulating their position beneath old lows right here throughout here. So you see this low here, all these equal lows throughout here. Smart money has now drove price beneath here to accumulate their position to send us to that external draw on liquidity, which is up here. Every move starts with a turtle soup. This low right here represents that 4-hour fair value gap to send us to that draw on liquidity, which is order pairing for the higher time frame. Smart money accumulates their position, and when it's ready to go, it tips its hand, and now we have a high probability inverse fair value gap, which we will get into in the fair value gap module. So right here on the hourly time frame, we see this hourly fair value gap. Now this hourly fair value gap is going to give us a 5-minute setup to send us to that buy side level, which is the external draw. After hitting internal range liquidity, we can head down to the 5-minute and get a setup to send us to that external draw. So here we are on the 5-minute time frame, and this right here is that hourly fair value gap, and right here is a 5-minute old low, right here is a 5-minute old low, right here is that diversion from it for an accumulation beneath old lows to send us to that external draw on liquidity. Now this is how you get your intraday setups. Right here, when we get that displacement higher, you can see that we have this tiny fair value gap right here that will send us to that external draw on liquidity on the hourly time frame. So we have now accumulated enough of our positions on the smart money side to send us to that external draw on liquidity. So what looks to be a reversal is actually just a retracement on the hourly time frame to send us to that external draw on liquidity. We get our entry on this fair value gap to send us to that hourly external draw. So this is exactly how smart money is accumulating their positions, and how a lot of people get faked out on the lower time frames for just a retracement on the higher time frames to then send us to the external draw on liquidity. So this right here, order pairing, is going to make internal versus external make sense, and how smart money engineers their position with a low resistance liquidity run to send us straight to those draw on liquidities. So order pairing is exactly what you are missing, and turtle soups are exactly what you are missing in your ICT concepts to understand the actual draw on liquidity. Reversals on the lower time frame are just retracements to send us to the real draw on liquidity on the higher time frames. So with that being said, let's move on to the next module.